following program is classified G. It's suitable for all ages. We would like to remind our viewers that the views expressed in this program by our participating guests are solely viewpoints of them who take part and does not reflect the views and beliefs of the Derana Media Network. This is an opinion-based program.
On an all-new Get Real, economic crisis or a challenging way forward. Sri Lanka is in a tough spot, no doubt economic-wise. The country is looking at new ways of doing business to ensure that despite the short-term hardships would turn out to become long-term growth. For over 70 years since we became a republic, economic policy has failed to be consistent. Hence, here we are reaping the ugly truth. With an open economy in the past, Sri Lanka has become a nation of dependence. However, under President Gotabaya Rajapaksa, he wants it to be a nation of economic independence. Is the new strategy the way forward? And is this the right time to change the path? For insights and analysis, tonight, I'm glad to welcome back renowned Sri Lankan economist Dr. Kenneth De Zilwa.
From Studio 24, with opinions that matter, it's time to get real with Mahieash Johnney.
And a happy Monday to all. Good evening. Thank you for joining me once again on Get Real, where we continue to discuss issues faced by everyday Sri Lankans. Of course, today's topic has been something that has been resonating for several weeks on this program. Sri Lanka's economy. I'm not going to lie, we as a nation is in a tough spot. But tough doesn't mean we've given up. We are doing something right now, and tonight I want to find out whether will this work. Well, in my opening statement, changing towards a nation of doers. We as Sri Lankans are pretty good at depending on everything, right? From our small days, we rely on our parents, our teachers, our family. We grow up. Then our dependency changed from that to our friends, workplace, colleagues, and spouse. Of course, the spouse. Well, this mentality of dependency has been embedded in us by our colonial masters, the Brits. I know. I can hear you screaming through the television, saying, here he goes again, screaming at the West. Just listen to what I have to say. Just listen to the point I'm trying to make. Research a bit and look at how we were before these so-called saviors of the world came to us. Just take a look at this documentary that captured the 1930s Sri Lanka. Jim, roll the tape.
During our visit in this tropical paradise, we were most impressed by the interesting story of the coconut palm, which grows in picturesque profusion all over the island and exercises a remarkable influence on the life, manners, and customs of the native people. A large number of the native household utensils are carved from coconut shells, which, when broken, are used to provide fuel for cooking. The natives of Ceylon use the dried branches for making fences and baskets and covers for their carts. Once every year, the roofs are thatched in this manner. Even the beds, chairs, and floor mats are made from the dried branches of the coconut tree. It requires about 5 years for a healthy tree to grow into its fruit-bearing age, and then for about 60 consecutive years, it produces as many as 5 crops, or approximately 80 coconuts a year. As we observe these happy and childlike people basking in the shade of the palms, their every necessity gratified by nature without struggle, we wonder what there could be in the present-day dilemma of the white man's hemisphere that could possibly add anything to their happiness and contentment.
Well, as you can see, nobody came and gave us the coconuts. Our ancestors cultivated them. No one taught us how to turn a coconut into an industry. Our ancestors did it by themselves. Simpler life lived, but done by ourselves. But Mahieash, the world is now complicated. We can't have that same attitude. Really? We can't? See, one of the things the Suddhas gave us is that they broke our ability to be independent. Then they replaced it with dependency, mostly towards them. Here's a straightforward example. If you research a bit back in the day when our ancestors were cultivating utilizing organic methods and getting the harvest, the colonial rulers came and invented chemical fertilizer. They painted a fake picture of getting a better crop. However, they literally sold us poison and made sure that we become dependent on it. See, if you need someone to be utterly dependent on you, you got to teach them how to be lazy and then sell them the very exact thing they need, which earlier they did it by themselves. But now you made them lazy enough, they pay you to do it. So they become poor, you become richer by teaching them to be lazy. The successful colonial philosophy of the British Empire. Well, this exact thing happened to our economy as well. Again, we were sold a lie, a shiny little lie that made us think what we had was so awful and what they had was so good. And we need somehow have what they have, even though what we initially had was gold. One of the critical mistakes made by our former leaders since independence, we forgot to teach our people to be self-sufficient. Now, here we are at the crossroads again, thinking in the very same manner we were taught eons ago that we as a nation cannot. We need the white man and we need the outside world. Of course, we need them to do business, but that's not what's happening right now. We are giving them business. We are selling our hard-earned savings. Economically, we are in a very tough spot. That's very evident from looking at all the newspapers, the news bulletins around the country and around the world. Sri Lanka is heading towards an economic crisis, the headline reads. And the only savior, according to them, the left-leaning media nuts, will get the white man to come save us again. As you can see, I am 100% against that BS mentality. Right now, this government has opted for a self-sufficient economic approach. This is very evident in the steps this administration has taken. With a pandemic at hand and all the negative directions by the naysayers, look at the progress we are still making. Roads are getting built, new business ventures trickling into the country, like pharmaceuticals and electronics. We are revamping our business approach to streamline to harness current global needs and growth in the textile industry as well. The useless opposition said that we can't get vaccines because we don't have money. Not true, as you can see it for yourselves. Said if the country is not open, people will starve on the streets. Again, not happening. Said this economic approach wouldn't work. Again, not true. Said the fertilizer ban would cripple our agriculture industry. In contrast, the opposition is bringing in farmers to protest, and that's what they do all the time. More intelligent farmers on the other side have been continuing to cultivate organically even before the government ban and selling their produce to European countries in an exclusive manner. You know, I don't want to point towards America, China, Europe, Australia, or even Hong Kong, talking about prosperous nations. I want to point towards Sri Lanka and say, look at the economic prosperity we are benefiting. And it's all because we've changed the way we think. For a moment, stop and look around and see as to whom these people who are screaming, no, we can't do it. If you analyze, you will see that they are the very ones who live a very comfortable life and who has everything. The very same people who are living comfortably on a daily basis. It's just that they are bitter. You and I changed the path of this country towards a different approach. So they are ferociously trying to alter our can-do attitude towards no, we can't. Yes, no, we can't. Give up right now. Sri Lanka can and Sri Lanka will. So let's believe in ourselves for a moment, right? All right, tonight I want to break down the policies opted by the government economically and get you to understand whether this would work or not. For that, I will be joined by Dr. Kenneth De Zilwa, a renowned Sri Lankan economist. However, before that, our facts guy, Derana, is standing by with tonight's real story. Derana, good evening. What do you think? Will the Sri Lankan economy outlook turn towards the better?
Mahieash, good evening. Yes, it seems like the current government is quite confident that they can put things back on track despite the COVID-19 setback. But the question everyone is raising is whether it can be achieved before things become worse. But there is positive news, as the game changer, according to the government and most business leaders have identified, is the vaccination effort. Sri Lanka's vaccination program is leading regional neighbours, with over 20% of the population receiving at least one dose of the COVID-19 vaccine. Over 33% of this number has received both doses. Based on information from the independent research think tank Our World in Data, from South Asian countries, Sri Lanka ranks second highest in terms of the daily number of COVID-19 vaccine doses administered per 100 people in a given population. In short, given the new entrance of the military to the vaccination program, Sri Lanka has proven to reach its vaccination targets very soon. The Asian Development Bank's flagship annual economic publication, the Asian Development Outlook 2021, forecasts a significant rebound in Sri Lanka's economy as domestic and global economic activities strengthen and vaccination campaigns gather momentum domestically and abroad. ADB projects Sri Lanka's economic growth to rise to 4.1% in 2021 and moderate to 3.6% in 2022. State Minister of Finance, Capital Markets and State Enterprise Reforms, Ajit Ribad Cabral, had mentioned that Sri Lanka will achieve an economic growth rate of 4.5% for 2021 and will improve this to 6% by the end of 2022. This is close to outside projections as well, which provides a degree of confidence in the government's position moving forward. A rising critique expressed by the opposition is the budget deficit depicted in the country. It must be noted that due to the pandemic and peripheral economic effects, most countries in the world run budget deficits. The US Treasury Department reported that the United States ran a budget deficit of $2.24 trillion in the first 9 months of the 2021 fiscal year. This exceeds a negative 14% deficit in comparison to the GDP of the country. Sri Lanka, in comparison, ran a budget deficit of 6.8%.
Sri Lankan economy is going through the same problems that the rest of the world is going through. And it is mainly due to the pandemic, the COVID-19 issue that is facing. We are more affected than the rest of the world because we are dependent on dollars coming into our country, and mainly it has come from tourism and from the employment income amongst our other export income, say like the apparels, etc. So what we need to do is focus on our exports. For the future, we need to depend more on a large export basis. We need to develop big exports like the other Asian countries have done in the past. And that's how we can go through this economic issue and make sure we have enough foreign exchange so that we can service our debt and also make sure any crises like this we can overcome.
The Colombo stock market had made an upward trend in the past few months. This is depicted through the Colombo All-Share Price Index, which is a major stock market index which tracks the performance of all companies listed on the Colombo Stock Exchange in Sri Lanka. It is a capitalization-weighted index. As per the index, in January this year, Sri Lanka recorded the highest market capitalization from the time the index had begun records. This is a colossal achievement given the pandemic conditions within the country. The CSE these days does about 3 to 4 billion in average daily turnover, which is much better than what it was over the past 5 years. During the past few weeks, the ASPI has reported a steady rise which portrays a growth in investor confidence within a marketplace that is slowly recovering from the pandemic.
The Colombo stock market remains to be active this year on many fronts. If you look at the volumes, or even if you look at the price growth, if you look at the all-share price index, it has appreciated by over 16% year to date. And even if you look at the S&P SL 20, which is an index that includes the largest of the 20 companies that are listed, again this S&P index has grown over 15% year to date from January up to date. So we have seen a significant growth in volumes. The other factor is that we have also seen increase the number of investors who are participating in the stock market. Driven mostly by the low interest rate environment, we have seen local retail investors coming into the stock market in a fairly significant manner. For example, we have seen over 18,000 new accounts, CDS accounts being opened, and a majority of those accounts are below the age of 40, which is also quite significant because we see a shift or a trend towards the younger set of investment that are coming into the market. And if you look at the accounts that have been opened, a bulk of them, over 90%, are now opened electronically. And of that, we also see that only 57% are from the Western province, which means the spread of the account is also quite widespread into other areas of the country as well.
Sri Lanka has paved the way to restart tourism by allowing fully vaccinated international travellers who have received the second dose of the vaccine 14 days prior to arrival to enter the country without undergoing quarantine. Travellers will require to produce a negative PCR report done 72 hours prior to boarding the flight as per standard procedure, obtain an electronic travel authorization via the Sri Lanka tourism website and purchase a mandatory visitor COVID insurance coverage costing $12 covering a period of 30 days and a $50,000 cover. A clear procedure put in play to revive the tourism industry. Another point of contention has been the government's steadfast decision to introduce organic farming practices within Sri Lanka. Though the decision is a very important goal to promote healthy agricultural methods, it has been met with a lot of resistance. However, the country has made the firm commitment to instill organic farming practices and expand its productivity in order to thereby protect a large part of the Sri Lankan population from a variety of non-communicable diseases such as kidney issues, which is rampant within the central part of the country. Another auxiliary benefit of this step of introducing organic farming methods is the newfound bilateral partnerships. Recently, the ambassador of Vietnam had expressed interest in partnering with Sri Lanka in order to share experiences of their own effort in introducing organic agricultural practices. The primary objective of the current government has been to implement the vistas of prosperity from day one. The current measures to promote organic fertilizer and the development of the port city were not overnight decisions. A key indicator for the economic prosperity is consistency, and that has been clearly displayed within this government. Hopefully, these steps can take Sri Lanka back on the right path. Over to you, Mahieash.
Well, hopefully we will get to benefit from the results of this new approach very soon. Derana was reporting there with the real story. Thank you very much. We will take a short commercial break. And on the other side, renowned Sri Lankan economist Dr. Kenneth De Zilwa will be here. Be right back. You're watching Get Real. To Get Real, time now to get some context into the conversation we are having tonight. Sri Lanka's economy, are we going down the drain or is it just hype? I will right now say it's a lot of hype. So we need to get clarity. You need to understand what's happening in this country. I know economic, even I fell asleep during business studies and economy in school. But, you know, there are so many layers you need to understand, and the layman won't. What you understand is the noise that has been created by the opposition, you know, all these people who are actually trying to gain a buck out of it. They don't care what happens to the country as long as they survive. So we need to get clarity into what's happening to our economy, Sri Lanka's economy, going forward. Dr. Kenneth De Zilwa is the only person I can speak to with regard to the economy to get clarity, because when he speaks about everything, it doesn't sound Greek to me. I understand. Welcome back, sir. Good to see you. You know, last time when you were here, you spoke to us about the fact that, you know, there are lots of plans. This is initially when the new government was coming in, and you were saying this is exactly where the government is hoping to go. Now, certain steps were taken, not popular steps, like the ban on importation, fertilizer ban, and all those kinds of things, and now taken place. Outlook seems to be a bit bleak at the moment, because if you look at all the headlines across, even in our news bulletins, the economy is struggling. Yeah. Are we struggling?
Well, Mahieash, firstly, thank you for inviting me for the program. I think I'm here far too frequently.
And that attributes to the fact that I only call in order to understand what's going on.
Thank you. It's a pleasure to be here, as said before. To answer your question, I think there are two ways of looking at this. I mean, what we see is in Sri Lanka, in the Sri Lankan context, it's twofold. So let me first break this down into two parts. The first part is that globally, capitalism is faced with one of the worst crises that it has ever seen. We have seen about 432 crises globally. Out of that, 140 have been financial, but 248 have been currency-related crises, and then about 66 have been within the context of sovereign defaults. Now, from those three particular segments that I just spoke about, Sri Lanka is not in any one of them. So that's a good point. But nevertheless, we have fallen into a global crisis, a crisis which is unprecedented. No one even expected it. COVID. I mean, so that is part and parcel of the adjustment process that even we as a country have to face. Now, facing this challenge from a Sri Lankan context is done with twofold, as I told you. The first point is that Sri Lanka has a chronic balance sheet problem. What is that balance sheet problem? We have a huge trade deficit, which is about $10 billion on an average basis. Annual average. And we have to fund that. Now, that funding requires a lot of resources, and that, in fact, takes a lot of our domestic savings, and we use those savings to consume. So that is the first structural.
Break that down for me. You said we are utilizing a lot of domestic resources. What does that mean? Because it is always nice to the people at the top who are making the decisions to understand, okay, we are following this theory, we are following that theory, that kind of thing. But that does not happen to the person out there, the everyday Sri Lankan. He is more concerned about how the price of carrot will go up. What's going to happen next 2-3 months? Am I going to have a job? These are the questions they have. Now, tell me, what do you mean by taking in the resources of the local market?
Yeah, so you're right. Now, if you look at the overall trade deficit, merchandise trade deficit, we still consume about $3.5 billion worth of consumer items. Now, most of these consumer items can be produced locally, which we are not doing. We are not doing it for a simple reason, is that we have been bogged down with this doctrine called comparative advantage, which has been handed down to us in economic textbooks, even marketing, economics, everyone has learned that. So in that sense, we continue to feel that we should be able to import cheaper and export whatever we can. So everything...
The lazy method.
So that is easy. That's why I say it's a chronic structural problem that we have faced.
And so this was there for...
This is there from post-1977, so it's about 44 years since we've tried to structurally change this. It has not been possible for many reasons. One is, as you said, the popular method is to feed the people and keep them happy so that their basic needs are met. And the easiest thing is to just open the tap, use your domestic savings. Domestic savings is all the foreign currencies that we save, which we utilize for our import consumption and part of our debt servicing. So the balance which we can't fund, we have to borrow. So there's we have a $10 billion export proceeds. We have $20 billion of imports. The gap is $10 billion. So we need to use some of our savings, which is another $7.5 billion, $8 billion there. Plus for any capital expenditure and debt repayment, we have to go to the markets and borrow. So that's the nature of our balance sheet that we have inherited. Now, people have been talking about current account deficit, fiscal deficit for donkey's years with no tangible action plan put in. Now, this action plan is not easy. It's difficult, as you rightly said, and people on the street don't care. But what is the option? We have come to a point that we have to really step back and see what do we want to do as a country. Do we want to continue to start expanding our merchandise trade deficit, right? Import all this. In 1 year, we imported $1.5 billion worth of vehicles. Thank God that has stopped. Like that, there are many other import items which we could locally produce, which we call import replacement industries. Now, that has to be given prominence. That has to be given a push. That's the only way we can reduce our deficit, so that will increase our we have to increase our revenue and also reduce our costs on
basically, the basic theory here is we want to keep more money in our hand. What we save, like in a household, whatever you get as a saving, you don't want to spend it on certain items. So you actually look at it and cut down. Okay, I may not need a roll of tissues because we wash. Don't need to live like the foreigners. So that kind of this thing maybe might not get the best kind kind of rice might get a substitute which is still equally good. So that is what you're saying.
Yeah, so that's why I was just going to say that. So that is one part of the structural adjustment. The second part is also we have a COVID situation that we have to deal with.
True.
So both
that is
these
just
two,
money going out.
So both these two are significant issues and challenges which you have to take head on. You can't step back. We have to ensure that there is economic activity. We have to ensure that economic activity is stimulated by opening up the economy. To open up the economy, you need vaccinations. To get vaccinations, you need the cash. So it's a chain of events that you need to have in place to ensure that the economy is back on track. It's not that simple.
That issue is not something Sri Lanka inherited or anything. It's like everyone, everywhere in the world is facing that problem. That is going to be part of their economic input and output. Let me go back into something you said with regards to, I think you used a technical term where you said, we need to find import replacements in Sri Lanka. Now, what the opposition is saying is like, okay, fine, understandable, but then let's do it in a smaller pace where we are, for a simple example, the vehicle industry, importation of vehicles. Okay, let's start making vehicles, and gradually let's move on to that. Why is that not a solution which may work?
Well, it's like this. Let me answer this. If you look at what we did with Hambantota Port, is also a classic thing. People said, okay, first let's start producing goods, then we'll build the port, right? So because that was the logic.
Chicken and egg.
Just chicken egg. So once you produce your goods, and if you don't have the port ready, what are you going to do with the surplus goods that you have produced? How are you going to export it to markets? Because economics of market share doesn't wait for you.
Yeah.
Right. So
you have to grab the opportunity.
You have to grab the opportunity. So COVID does provide a unique opportunity for Sri Lankans, because Sri Lanka now is well positioned because every country had shut down. Every country faced the same situation, unlike any other crisis that I spoke to you about, the 432 crises that we saw. It didn't happen across the world, right? In parts of the world when it happened. This time it's different. Everything shut down. Everyone had to restart. We are in a good position because we want to restructure our balance sheet. We want to also look at rationalizing some of these imports, curtailing this, and giving local entrepreneurs the opportunity to manufacture these goods.
Is that happening? Because we don't see that happening. What we see is we have shut down the importation of vehicles, fertilizer, and all those things. On the other side, we don't see it's getting balanced. Is it happening?
Yeah, it takes time, because something that has happened over 40 years, you can't change it in 1.5 years. That's why I keep telling people, Singapore didn't develop overnight. Singapore took 40 to 50 years, consistent policies, single party politics, no democracy, no media freedom, absolutely zero media freedom. In fact, Singapore is blacklisted in the Media Freedom Index.
Of course.
Right? So with all that, Singapore has done exceptionally well.
Economically.
Right? Economically. And they are 60,000 per capita country. But people look at only the results in terms of the attractiveness and the colorfulness of Singapore. But what goes behind Singapore, no one really tries to analyze. So Singapore had sound economic policies which was consistent with one party.
Let me ask. The government has taken certain decisions. This is the direction we are going. It has announced to the business community, these are the steps we're going to take, this is what we're going to do, and it's very clear. Is it working?
It is working, because we saw last year the trade deficit reduce. Now the idea is to continue to ensure that we bring this trade deficit down. That's the first challenge that we have. That's why this import rationalization has kicked in, and that had to be done in any case. COVID or without COVID, we had to do that. COVID made it relatively easy. So that rationalization is taking place, and the pain points I can understand in the economy, because as you rightly said, vehicle importers suddenly find themselves in a bit of a quandary. A huge $1 billion industry, now it's only $200 million of vehicle imports. Like that, so even when you look at import replacement, even fertilizer, which you spoke of, a similar type of story. So you can't wait, you have to take a decisive action, and you draw the line and you say, let's shift from here. So businesses...
This is like a make or break situation.
It is a make or break because it is for the future of this country. I mean, if you don't take strong decisions, which are painful and not popular, I mean, popular economically and politically, right? So it's not popular, but you have to do the right thing by the country's balance sheet. I mean, a CEO goes to an organization and looks at his balance sheet. I mean, he makes a similar decision. So similarly, on the economic front, the CEO in charge, which is the president, has to make a strong decision. You can't let it drift anymore and bleed. So that's the decision and the path that we have taken.
I'm coming back into the same question I asked before. Is it working? Like, do you see statistics, data showing you this particular, like, let's take the vehicle ban on importation of vehicles. Is it working? Do you see the trend actually ticking towards a different level?
I think yes and no a bit. I mean, you're very right. I'm not satisfied with the numbers I see, because I still feel that businesses are preoccupied doing other things, despite all the fiscal incentives that have been offered, the monetary policy stance that is in place with a single-digit interest rate. Businesses are not looking at the opportunity that has been presented. Why I say that is, we have a free port that is coming just at the backyard of Sri Lanka, which is the port city. Now, exactly. Port city is an economic zone, economic center in its own right. I mean, technically, it's like a mini country, technically, if you want to call it that. But it's within the geographies.
I honestly see it as an opportunity.
It's a $100 billion turnover type of opportunity. Now, I keep telling people, do you know, Port City has to have furniture, food, electronics, blankets, beverages, pretty much everything. Now, are we going to allow them to import this?
Opportunity, yes.
How is opportunity? This is import replacement at your backyard.
That goes back into my argument all the time, you know, the thinking has to change. Sri Lankans really have to, you know, take ownership of this country rather than wait for the white man to come and save us. We already, I think the black man's intelligence and the strategy is working. I want to take a short commercial break, and I also want to get your take on, you know, the biggest story during these days. The rupee is falling. You know, there is always, you know, crying wolf kind of scenario happening. Let's take a short commercial break. You're watching Get Real. I'm in conversation with renowned Sri Lankan economist Dr. Kenneth De Zilwa. We'll be right back. I'm in conversation with renowned Sri Lankan economist Dr. Kenneth De Zilwa. Doctor, we've been talking about the direction the country is currently going economically, whether it's working, and you gave a very clear answer. Now I want to get to the next subject, which is the talk of the town. The rupee is falling, and you know, everything is going to, if I may use the word, shit. You know, that's pretty much what everybody's saying. Look at any newspapers, even the newspapers of our own organization. They're talking about the fact that, you know, the rupee depreciation is bad for the country. Obviously, it's bad. We don't have to sugarcoat it. But tell me, what's the strategy here? Because there is two sides. Like how we investigated on this on our program yesterday was the fact that, you know, some are saying it's good because it's good. Importing guys, you know, they're pretty okay with it. Exporting guys, even happier. What's the story?
Yeah, I mean, the rupee is in a chronic situation. We have been depreciating the rupee on an annual basis by about 6.5% just to remain competitiveness, to regain our competitiveness. But that theory doesn't hold because we have not seen that depreciation give us ample revenue from export earnings. So there was a theory that the rupee has not depreciated sufficiently large enough, and that's what we saw happen in 2018 when the rupee depreciated by 18%. Now, despite that depreciation, export volumes and export revenue didn't increase. So which means that theory of depreciation helping exports to increase market share doesn't work. actually the reverse happens, because whenever you depreciate, the importer gets a price discount.
Yeah.
Right? So that happens. The only thing that happens with a rupee depreciation, it adds to your overall input cost, because Sri Lanka technically has a lot of inputs even for its exports. So input costs go up, and then what happens is you become relatively non-competitive in the international scale. So therefore our exports suffer, right? Exports tend to suffer, and therefore we lose market share. So that theory is something that we have now understood, and we don't take that too seriously. But in this situation, Sri Lanka is faced with a cash flow mismatch. As I said, because of COVID, tourism industry, which was given us about a $3.5 billion revenue, has depleted completely. In fact, the numbers I just checked, if you look at January to May last year, we had $682 million worth of tourism revenue. This year it's only $22 million.
Massive,
so
massive
going forward, if you look at our numbers, even the numbers, we are discounted tourism revenue. We don't see tourism revenue even getting to $1 billion, probably around 500 million at best. Now with that type of revenue shortfall, obviously there is an issue with the overall cash flows and the supply of dollar funding to meet imports. And imports, as I said, all you got to do is open the tap and there's a floodgates of imports, and that's what we are seeing in imports. Imports, despite all that, we have not restricted imports as perceived by many of the people out there saying there are issues with imports. We have rationalized imports, and imports have actually increased from last year. But we hope that the aggregate number at the end of the year will not exceed more than $18 billion. So we are looking at imports about $18 billion, 17 to 18, plus exports about 12, and then we can manage the overall current account fairly well, because we have got debt servicing on top of this. So priority now from a national point of view is to ensure that dividend payments are also, we have to permit them, plus look at critical imports that need to be permitted into the country, let them also come in. Plus we look at our debt servicing, which we have one hurdle to get over on the 27th of July. By that time, I think things will be much more settled down, and this uncertainty will probably evaporate, is my personal belief.
Loans taken by various countries. We've taken, I think, $1 billion loan from China, around 200 million from Bangladesh. We are taking some from Japan and all those, that was seen as such a negative thing in this country. And I understand, in order to, pretty much pay for the stuff that you really have to keep rolling on a daily basis, you need money and you need to seek elsewhere. What do you see? The government went ahead and we saw when around 500 million came into the country, the rupee came down a little bit, and then again it starts going up. What I need to understand is it good to have a very depreciated rupee or appreciate one? Because there are industries that benefit from both decisions.
Like I said in my previous answer to you, Mahieash, depreciation is not something we really want to see in the short run for our export strategy, because I said we do import a lot of corrugated cartons, ink, all other raw materials, so there is import content that is there, and transport costs also. If you depreciate, transport costs increase, and therefore that also feeds into the overall cost structures of the export industry. So we have to be mindful how we do this, with that being a center focus of, and one of the key pillars of our strategy, the government strategy. That's why they said that they want to maintain a stable rupee. Stable and predicted rupee is what every business person wants to see, because then they don't have to do risk management and they don't have to employ a treasurer to manage currency risk. So that's something that we have to be mindful, and I think eventually we'll get to that. Now, you mentioned about the swaps that we went on borrowing. Those are financial market instruments used as a short-term measure to bridge your cash flows. So we give rupees, they give us a hard currency, because the Sri Lankan rupee is not a hard currency, it can't be traded. You have to have hard currency. So it's like a collateralized loan and a deposit, where you give one currency and you get another. So we did go down the path of going to the swap market process for a simple reason, because there was no other option on the table. Our international sovereign bonds got hammered, it tanked, yields went up to 27%, and that's on the short date, but on the longer date, yields remained at 15%. Now, if you are going to refinance 15%, that takes away all fiscal space that is there for us. People are pushing us to go there, and even central bank, there are lots of discussions around this type of structures. But I think sanity did prevail, and I think they went in the route of the lower cost option and the most efficient way of funding this whole, which I spoke to you about, the loss of revenue that we had.
But we do have a lot of loans that needs to be paid. You talked about a 27th July deadline. How are we going to do that if we don't have the money to pay?
No, so we have the cash. If you look at the cash flows, there is sufficient cash flows to meet this obligation. In fact, from January, we have been servicing our debt to bilateral and multilateral agencies. We have paid quite a bit. So out of the 4.3 billion, I think now we're at the residual level where we got only this large payment of $1 billion+ that we need to pay to bondholders. So that obligation will be met without any problem. Very confident. There is no issues there. Despite all what he said out there, I'm very confident because we know the cash flows, and there is a backup. As you know, the backup is plan B is the swaps. Most of the swaps are not drawn down. I mean,
it's still
there. So People's Bank of China swap for I think $1.5 billion is still there. We are not drawn that down. Then there are several other swap mechanisms that are in place which are not drawn down. So all that adds stability to the short-term cash flow measures that are in place.
What is the level of rupee you expect it to be, going forward, applying all these theories that the government has taken as of now? Where do you see that it might actually give a lot of benefits to the country internally, and also, vice versa?
If you're asking me about the exchange rate level, particularly, I mean, yes. We technically, when you look at the overall balance of payments and we look at the overall debt servicing obligations, because we have to generate rupees, and that rupee has to be converted into dollars, and our debt servicing paid. So the optimal level, I think it has been mentioned in many investor forums, I think is about 180, 185 level. I mean, so if it comes down to that level, which I think eventually come down because the cash flows will continue to come in. As I said, Port City, we are expecting about from probably next year, on an annual basis, there could be about a $2.8 billion inflow as the Colombo business center starts to take off. So those cash flows plus the other cash flows that will come through in the investment corridor, plus the fact that we are looking at stimulating some of our local entrepreneurs now, as the central bank has issued a circular where local entrepreneurs can go into the capital markets and raise funding, and those funds can be used for capital formation, which is what we're trying to see. Because if you take our total investment to GDP ratio, or capital formation in other words, about that ratio is about 28%. Out of that 28%, we have local entrepreneurs contributing to about 22% of that ratio. About 4% is public spending, government spending, and 1% is FDI. So that's how the 27 is made up. So we are hoping that ratio, with the measures in place, particularly on the fiscal incentive side, the monetary policy stance that has been taken, plus the industrial shift that we are looking at, industrial production shift that we are looking into, all those combined would enable this particular ratio to get to about 40% is our target, so that local entrepreneurs would eventually expand their balance sheet, increase their capital formation, taking to about 32%, while government will be about 6 to 7%.
we have to go through this tough time in order to get to a better times. Understandable. Let's take a short commercial break. On the other side, I want to talk about, the printing of money, one of another issue that has been, very heavily criticized by the opposition. Is that okay? Are we the only country who's doing that, or the rest of the world is doing that? And what kind of impact it might have in the future of the economy? I'm in conversation with Dr. Kenneth De Zilwa, renowned Sri Lankan economist. You're watching Get Real. We'll be right back. With renowned Sri Lankan Economist Dr. Kenneth De Zilwa. Doctor, we've been talking about a lot of things with regard to the economy, the action taken by the government. Will this work? You're very confident. Hopefully we will get to see the results very soon and the people can experience that for themselves rather than, hoping all the time. One thing that I mentioned prior to the break, money printing. This has been, everybody is saying that is the worst thing that could happen to a country. And the opposition goes on saying billions of rupees have been printed, this and that. What is your take on that?
Well, Mahieash, money has to be printed for an economy to turn. So the lubricant of an economy is money. Now the theory of money printing causing inflation is slightly different, because the theory says that excess money supply leads to higher prices. Now that is based on a particular mathematical formula where they look at money stock versus quantity of goods produced, quantity of goods produced, prices equals money stock into velocity. So that's the mathematical formula that they generally look at in terms of trying to see how inflation is caused by money printing. So in this particular formula, the variables that are up there are certain assumptions. Now these assumptions are only at a textbook level. They are not
experienced in
the real world. And that has been proven globally, not in Sri Lanka. Sri Lanka still clings on to this theory, and that's all right, because there are different views of this. But globally, no one really pays too much attention to money printing causing inflation. Empirical evidence, if you look at it, doesn't prove it. If you look at China's excess money stock is about 252% of GDP.
Let's talk about the lords of the opposition, America.
America is the same. America is no different. UK is no different.
Exactly.
Right? Japan is no different. Walls of money has been pushed in.
Why do people give so much concern about this fact? Money printing. Oh no, that's going to pretty much, ruin the economy. Why do you think?
Again, I said, because people are probably not really reading into what is happening in the world over. Because we study something and we take it as gospel truth.
Yeah.
Something that we studied in 30 years ago definitely doesn't hold true anymore. That's how the world has changed. Otherwise, these types of business cycle emerging business cycles will never take place. So we unfortunately have been trapped in this type of mentality. And even there was a brilliant article, interview on Bloomberg, where one of these gentlemen explained that money supply causing, or inflation is as a result of money supply, has been trashed, and that it doesn't exist anymore. It's only a few people that still try and tout about it and make a bit of an issue out of it. But empirical evidence doesn't show that. The assumptions are also huge. There's a huge concern about the assumptions, because they look at velocity being constant, then they look at money, the variables of money on those particular variables are fairly distorted, because actually what does create inflation? It's money in your hand, money in circulation. not money in your checking account, not money in your fixed deposit. But nevertheless, they aggregate all that into money stock, and they use it to show whether it causes inflation. While one more last point, on the quantity side, quantity is at its maximum. It's the economy is at its fullest employment and full production. Nowhere in the world will you find that type of situation.
In Sri Lanka?
In Sri Lanka or in the world. Even if you look at our our industries are not at full capacity. They are running around 70, 65, 80 at maximum. No one is at full capacity. So there is room for production.
But the theory says it has to be.
It has to be. That's the only way it holds true. So if money is increased, if other things are held constant, then prices have to increase.
That is so true. It comes down to the same theory that I've been talking all throughout this program, change of mentality that needs to happen right now. If we are not going to do that, then there is no point in talking about a future. In Sri Lanka, we may do the same thing what we are doing every day,
Absolutely.
and then, suffer. Like I said earlier on, is the fact that I don't want to, in another 5 years' time, 10 years' time, I don't want to pinpoint at Singapore and say, oh, that is a developed country, that is a developed. I want to pinpoint here and say Sri Lanka is a developed country. People need to get on board with that. You would know when you're talking about untapped market, the Sri Lankan crab is being sold at around 50,000-60,000 rupees in Singapore. In those restaurants, and there is a market. Nobody wants to tap into that and look into that.
Yeah.
The very little people who has actually done that keeps quiet.
Sure.
They don't want everybody else coming into the market. Dr. Kenneth De Zilwa, thank you very much. It's always a pleasure to talk to you and have a conversation about the economy. I can breathe and go and sleep, soundly tonight. In the fact that the country will be slowly recovering. I know we are in a tough spot. We need to accept that, but it's not about the fact that you are in a tough spot. You have to be in a tough spot in order to get to a better position. So it's all about what you do during this time. Once again, thank you very much. Hope to see you again, as things develop, so we can break down things and give our viewers a different take on what's happening rather than the noise that is being created by ourselves. But we are to be blamed as well. Anyhow, thank you for watching. That's all the time we have for you tonight. Make sure to stay positive and test negative. I'll see you next time. Good night.
We lost our minds and gotten deeper than we meant. Infatuation is blind, love will clear the way ahead. So no more games, I hold my hands up to the sky. 'Cause the light I see feels like it's burning out so bright. You had no choice, you had to run. But can't you see it's still the